Donald Trump is at a cookout and he's grilling everybody. Let's get into these tariffs and what they mean for the market and the US. This is just a screenshot of some of the tariffs that are being put into effect now. So you have China's tariff increasing by 34%, Taiwan increasing by 32%, and so on and so forth. You can find all this stuff online. And it's safe to say that they're making an impact on the market. The Dow down 1,300 points. As you can see, everything's just getting fried right now. Because as an investor, a lot of companies outsource a lot of things that they make or they sell to a lot of people overseas. Now, what happens for Apple or something if you're making your iPhones in China and like we like to the chart, your price just went up by 32%. For sake of simplicity, you now have $32 more that you have to spend for every $100 when you try to import something. So you either have to take that cost and let it eat into your profits, which makes you less profitable as a firm, which means less people are going to want to invest in you, or you have to take it on to consumers, aka us, and your next iPhone is going to be $1,600. Let's look even further into the future, and let's say that people or companies start saying these tariffs are a lot. I'm going to start producing inside the US. Take Apple, for example. Now the cost of the iPhone to make it is going to go up because even if you choose to make it in the US and you avoid tariffs, now you have to pay more people. The productivity is going to be a little bit less, whether it's ethical or unethical. That's just a fact. And then when these tariffs are revoked or changed, which is more than likely going to happen in the next 2 to 3 terms, all of a sudden, Apple is now at the mercy of other phone competitors who are able to produce overseas at a lot less of a margin because they switched to negate tariffs and built up their whole infrastructure in the US, which is known to be more expensive for productivity than somewhere outside of here using globalization. And this is why I really think you might see a slow industrial indoctrination of assets and of technology back into the US because think about it, if you're a business owner, you might be worried, hey, this isn't going to last. And as soon as this is gone, you're now at the mercy of any good that's priced lower than yours, which is going to be everywhere else in the globe, most likely, which puts your company at a major disadvantage in the long run. And you just spend all this money and it just technically has gone to waste. This is just going to put investors in a tricky spot, which is what you're kind of seeing in the market right now. And it's just a whole load of uncertainty. Now, hypothetically, if productivity does come back to the US, that should help our GDP and maybe even give us some extra tax dollars we can use to take down the debt. And it should technically help with national security because we'll probably be using less foreign goods and more goods developed inside the US. But we don't know this for sure. We'll just have to see how and when it plays out. But this is definitely something we're going to watch right now. It's a big catalyst for the market. But overall, just looking from a macro perspective, you have tariffs. You also have our GDP, which grew at only a rate of like 0.3% in this last report, which is not the best. And we still have a little bit of sticky inflation. So these tariffs can mean a lot for our economy going forward and be a big catalyst for some good things or maybe some bad things. And you definitely keep your eye out for them.